This is part 2 of the Meet Kevin Not Investment Advice video. So remember, he's a YouTuber, and everything he does, because he's not a financial advisor, is for entertainment purposes only. So you got to keep that in mind. Now, if you're following him and doing everything that he tells you, apparently he said to sell everything. And like I said, if we're going to have a major market crash, and he said buy back into the market within 60 days. So whether the market goes up or goes down, there's not going to be a big change up since we're so incredibly overvalued. So chances are he might not sort of lose out on a big gain, and he might be buying good value in the next 60 days. So now I don't know the particular stocks he sold, but I believe they were a lot of tech stocks like Apple and Tesla and so on, which have done extremely well and could be considered greatly overvalued, considering that the entire market is according to the CAPE ratio, or the Warren Buffett's indicator. So look at the Buffett indicator and the CAPE ratio. They both show that the stock markets in the United States are extremely valued, meaning overvalued, by as much as 150%. So that they're sort of around 250% of a reasonable value. And so to become reasonable, they should be 60% lower. And so because of this, you could say the markets are overvalued, but you have to look at individual stocks if you are an individual trader or investor or whatever, and you have to be extremely intelligent. And so this Meet Kevin guy, he's extremely intelligent. Now he's going to get controversy, and people are going to be interested in him just because he does something controversial, like telling everybody, which I heard he tweeted, so whatever Twitter followers, he said sell, and that was just a one-word tweet. That's what I heard. This is all you have to double check, do your own due diligence, and do your own research with everything you do with your money. And remember, for most people, unless you have extremely high IQ and have a proven many years track record with money and investing and stocks, it's just extremely much of a gamble, and chances are you're not going to earn very much if you're average and make decisions like the average person, which is about gaining maybe 2.3% a year. And if you're new to the markets, you could even lose a lot of money by selling. If you've lost a lot of money and you sell now, and then maybe if you have picked individual stocks, they might be at their bottom and they're only going to go up, And so if you're following his advice, you could lose a lot of money. I'm not saying he's going to lose a lot of money. I'm saying you could. And he might also lose money, but there's a little bit of a question that even if your stocks have gone way down, they might not be at a bottom. It really depends on what happens, and it's so unpredictable exactly when the valuations are going to become reasonable. So that's a big question. Historically, sometime they're only about 4% of the time. So 4 years out of 100 years are the markets so overvalued as they are right now. And they've been this way at least a year. So I say within the next 2 to 4 years, chances are they will come down, and they could come down incredibly, as much as 90%. And individual stocks, which may have already come down 60%, could go down even more. They could go down, say, another 60% plus 30%, so another 30% to come down 90%. Or they could even go out of business if you've chosen, individual stocks. In a 20-year span, maybe 40% of them crash like 70% and never recover. And then a lot of them tend to, especially new companies, maybe only 10% survive 10 years, something like that. So if you're investing in new companies, be very wary. And this is a highly risky time in the market. So if you need money in the next 5 years, if you need that money, maybe it is a good time to sell. So I'm not saying he's done a good thing or a bad thing, but I'm just saying you have to be very careful, and you don't know if you're picking stocks like he is, you don't know if your stocks are going to go up, and so selling them now would be a foolish thing. You don't know when to buy back in. But if you've invested in the entire market, so actually say you've invested in some index funds that cover the whole market, since it is so highly overvalued, and maybe it's 14% down from recent all-time highs. So if that's the case, and you have patience that you can stay out years, it could be 1 year, it could be 1 day. But if you have the patience and you don't mind waiting for the entire market to be more reasonably valued, which probably it will be, so there probably will be large crashes or even just bear markets, so a slow decline in the next 4 years sometime, starting tomorrow or today, possibly. So it is not unreasonable to get out in that case if you need money in that time, or if you're a long-term investor and you've invested in the entire market. So it's not unreasonable, it's not foolish, given historical information. However, there's a big caveat, which is there's no guarantee the future is going to be exactly the same as the past. And so getting out now, it still could be a mistake. Even if it's a reasonable decision, it still might not end up being financially the best decision. And you just don't know. It's a matter of statistics. So good luck. Thanks.